Hey Pat, this is Derek. I wanted to make this video since we haven't met in person yet. The reason I didn't want to meet with you, at least not yet, after some time had gone by, is because of COVID. I didn't get it, but within a short window, like both my parents did, my sister did recently, um, and that kind of blew my mind because we went all this time and none of them caught it. And I haven't had any exposure to them because I don't live with them, but they don't all live together and they still got it in that short window from when we were talking about meeting. Um, and I'm working on getting my shot. So, like when we do meet, I'll be vaccinated. So, you'll be protected and your kids will be protected. Um, Hopefully, there's better days coming. Prayers for that. But when I do meet with you, I'll have the shot. And that should be very soon here. But I just wanted to talk about some of the things we would have discussed had we been in person. Um, and I've made this video over many different times. I was having difficulty getting it uploaded. And I found a way to just be able to talk so that I can send this to you and you can watch it whenever you have time. Um, and there'll be more coming. And when we meet, I'll give you things that are physical that you can hold and refer back to. But here's a brief introduction on what I wanted you to know to get ready as a first time home buyer, what to expect, and things that we could do going forward. So, um, the two things that you can do now is work on saving money and improving your credit. Sorry, give me one sec here. I'm just going back and making sure the video. Okay. All right. Yeah, two things that you can work on now is saving money and improving your credit. Um, the reason we refer to saving money, you're going to need funds for down payment, closing costs, and even outside of those two things, Pat. Like when you do get your house, like there may be there will be expenses eventually, like for repairs. So there's a good practice of saving money. Now, I am a strong believer in affordable housing. In fact, that's what I dedicate most of my time to. Like I'm in different organizations and meetings about learning different ways first-time home buyers can save money. So, like, I do know that with mortgage lenders, like at least I think the number last time I checked was like over 70% of first-time home buyers qualify for some form of down payment or assistance or closing costs. But I'll still go into the fine details of what those are. And later on, we'll talk about different lenders to talk to. But I just wanted to throw that out there. Work on saving money and improving your credit. The reason for improving credit is when you meet with the lender, they're going to look at everything. They're going to look at your income. They're going to look at your everything on your credit report. They're going to look at your credit. Like if you have lots of credit cards, like they'll look at everything. They're going to see what you bring in, what's being deducted, and how much they feel you can afford for a house. There's a few good first time home buyer mortgage lenders out there that we'll talk about. Um, but yeah, let me get started here. So for saving money, again, as you know, I'm not a credit counselor, but there's some things I know that they will discuss with you, things that are easily accessible, things that I've learned on my own. Any credit cards you have, the companies want it under 30% of utilization. So if you have $1,000, they don't want more than $300 used to look better. If you have multiple credit cards and they are maxed out, a good strategy, like depending on how much you spent on each card, say they're all maxed out. A good strategy that one would refer is make a budget, um, paying the largest balance credit card off first, meaning you make minimum payments to the other cards. Find a way to set a budget to pay a little more towards the larger card. Either get it to 30% or pay it off like eventually over time. And once that first card is paid off, that amount you were paying towards that larger card, you would go to the next largest card. So you would be paying off the other smaller cards, paying the minimum amount or whatever the amount you set was. And then you would apply that same large amount to the next card. And you would keep doing that until all of your credit cards are paid off, as an example. But yeah, you want to get your credit cards to at least 30% of card utilization. Pay the larger cards off first. But yeah, like another thing you could do is talk to a credit counselor. You and I briefly talked about it in the past. I don't know if you remember. Credit counselors will help you set a budget. Good ones will hold you accountable, meaning like they'll help you lay out all your finances. They'll see where all of your money is going with you. Like this is going towards your rent. This is going towards your utilities. This is going towards your car note, et cetera, et cetera. And these are your debts. And this is the strategy that we want to work with you to addressing your credit by paying this much toward this much towards that, this much towards savings, et cetera. Homeport is a nonprofit organization that offers free credit counseling. And that was one of the ones I was going to push your way, like later on down the road, talking to Homeport, because they're nonprofit and they're free, and they offer free credit counselors, and they hold you accountable, meaning they check back with you to make sure you're applying the factors of what you've learned with them. But you could use anyone. Like if there's anyone that I could pull up from my history, like other businesses, but I like to refer to Homeport mainly because they're free. Let me see here, for saving money. Now, I know I talked about it before briefly. Saving money is important for the down payment and closing costs. When you get a home, the down payment could be as little as, sometimes it could be nothing, but 3.5%, 5%, 10%, 20%, whatever the arrangement that we come up with for the mortgage lender. Usually it would be the lower amount. You need some form of cash for a down payment. Like, so if the house is $100,000 and you put down 3.5%, that's $3,500 expected to come from you just for down payment. Now, again, like I said before, there are lots of different down payment assistance programs, many out there. Like Homeport has one, OFA has one, Communities First has one. Like there's lots of different ones, and my goal, of course, Pat, is to help you get that down payment assistance programs to pay for it completely or take care of a large portion of your down payment assistance and closing costs. But I still want to get you in the practice of saving money, because you may need that money later on down the road for repairs or something like that. They say when you get a house, you should save like possibly up to like 1% of the home's value. So like put a little aside just because there could be a repair that you never expect. That's a pro tip. But yes, in regards to saving money, there's a couple ways you could do it. You could, well, one, again, talk to a counselor. You'll see, and they'll help you make a budget. When you make a budget, you'll see where all your money is going and any extra money you may have. And depending on the strategy, like they may put more towards paying stuff down if you have a lot of things on your credit report, or you could save money with it after seeing the budget. So if you decide to like make a budget on your own, for example, and see where everything is going, one way you could save money if you're very disciplined, and that's what I want to work with you on being, is make a budget. Everything that goes towards something like the utility or the rent or the car note, all those things. Also make yourself a utility, or make yourself something that you pay every month, whether it's big or small. For example, like say it's $50 a check, um, going towards yourself. Um, that's a way that you could get into the best practice of paying yourself instantly. Is just when you make a budget, make yourself a line item for something that you pay. Pick an amount that you're comfortable with. Put it in a savings account, preferably an account that has like a higher interest, so that the money grows for you as you put the funds in there. And don't touch it. Do not take it out. Just let it grow. Let it grow. That's one way. And then another way you could practice saving money is automated. Some of your grandkids may or may not know about some of the things I'm going to mention here, but there are lots and lots of mobile applications and software that can help you save money. I'm going to list a couple, but uh, you could do whatever you wanted. Something that I've used in the past, there's a mobile app called Digit, and like what it would do is it would be associated with your debit card, associated with your account, and it would save the um, the it would round up the change amounts for every dollar you spend, and you can set limits so that it doesn't take too much. Meaning, like you open an account with them, you attach your debit card, and let them know you want to save money as your goal. So what they would do is you would go to Starbucks and you buy something for $3.50, right? So the change amount is 50 cents. What the app would do is it would take that other 50 cents from that dollar, that whole dollar, and it would put it in a savings account. And then I would go to Kroger, right? And I would buy a few things, and say I bought something for $1.80. I spent $1.80. The app would take 20 cents and put it in that account. Now those seem small, but that adds up. And one day you log in and you look at the account and you're like, wow, I have hundreds of dollars in here, because the interest rate is high in that account too. That was one of many things out there. And I know there's other applications that do similar things, like Acorns, I believe, helps you round up spare change, and they do something different. They invest it so that it grows faster. Um, but yeah, those were a couple things that you could do in regards to saving money and improving your credit. And what I'll say, going back to improving credit, um, you want to find out what's on your credit report. If you don't know, you get one free report a year through annualcreditreport.com. And what you would do is you would go to this website. Again, it's annualcreditreport.com. Um, it will list all of the accounts on your credit report, and you'll know exactly whatever that item was, like when it was reflected, when or where it came from. And it won't show, one thing it won't show you is the credit score after you look at everything. Like, it just shows you all of the accounts. So one good thing about it is, again, everything is there, and you'll see where it came from, the amount, etc. And from that, you can make a strategy on how to address everything. Like if you have anything in collections or um, judgment, any credits, everything would be on this one free report a year from annualcreditreport.com. And you could just use that to make your strategy. There's other applications out there. Some you may have heard of, some may be new. One is called Credit Karma. I know they have commercials you may have seen, or Experian Boost is another one, and there may be a few other ones out there. Those are good because they run soft pulls on your credit when they show you everything. Like they give you an estimate on what your credit score is, but they show you changes what they see on your credit report. And those are other applications. Again, Credit Karma was another example. Um, Experian Boost was another example of one of these smaller things. So, um, but yeah, I wanted to make this. We will talk again in person when the time comes. But I just wanted to get this out to you because I recorded this video many times over. Many times, like it wouldn't upload, and I felt like the other videos were much better, and I wanted to get something to you, um, concrete, so that you could refer back to. Um, but those are the two steps I wanted to give you assignments on, if that's what you call it, like work on saving money and look into improving your credit. Again, I'm sure we'll talk again soon on the phone. Um, but I also wanted to give you some of the details on like how the market is and what to expect. That will be the next part of this video. So as you may or may not know, like the market, like not only in Columbus, Ohio or Central Ohio, but like most of the United States, it's very, very competitive for buyers because the demand for houses, um, there's not enough houses. Long story short, there's not enough houses on the market, and there's a high demand for people that want to buy houses. Lots of theories on why this could be. Some people think it's because of COVID or um, what started at the beginning of the pandemic. Like more people want to, you know, keep their homes, whatever it may be. Like there has never been a time where the houses available on the market, the inventory, as you'd call them, have been this low. So what this means for you and for me, like it's going to be tough. There's going to be a fight. But it's possible because houses are sold every day. It's just I'm just giving you the expectation on the war zone that we're going to be soon approaching whenever you're ready to buy a house. And I say war zone because like if we go traditional where we visit houses that people put on the market, which we'll do currently, like the houses, whatever they're listed for, typically the majority of them sell very quickly. They get multiple offers, many above asking price, and as you know, only one gets accepted at a time. If something goes through, they can go to the next one, or et cetera, et cetera. But we're in a situation, Pat, where a house goes up on the market, it's listed. They may or may not have open houses. When they have open houses, the window is so tight, Pat. It's very hard. You can't just show up for a lot of the houses. You have to schedule a window, and usually the windows, these little 15-minute windows, like they go so fast. You have to hang on and hope that someone cancels so that you can see a house if it comes to that, if it's not already sold by then. Again, when a house goes up and is listed, that house, if marketed properly, will get multiple offers. I'm talking 10, 20, 30 plus offers. Many or most above asking price because they're supposed to advertise their highest and best offer, what they want for the house. And again, only one of those gets accepted. And I want to tell you this because, again, like this is how it's been for a while now, for at least a few years. The demand for houses are very high, and it hasn't really changed, especially with COVID. Like when COVID came or before COVID hit, many thought that that's what would be the time where like things may get balanced again, but no, COVID only made it worse, or the pandemic really made it worse. Where people really like the inventory and the people that want it, like it just it made it a lot worse. With that being said, I don't want to discourage you again because I'm passionate about affordable housing and first-time home buyers. It is possible to buy a home, whether it's one of the homes that someone has owned before. We visit and we make offers and go through that process, or there's a few other home types we haven't talked about, but we'll talk about it. One is a new build where there's a developer who will buy an area of land and they'll make a style of a house. And there's some things you can choose for customization, but pretty much the houses kind of look the same. I'm sure you've seen those before. And those houses are actually comparable in price to houses like that are just on the market. The reason for these companies is because of the shortage of homes. And I do have a list of all of the companies that do this. If you ever wanted to meet with them to see what they offer, we could meet with them. Just let me know. Again, it's those communities you've seen where the houses look the same. They may or may not be under construction when you have seen them, but usually it's a community built by a new built company. The other kind of home, which I don't know if you're open to or not, or if you wanted to explore more, there are condos. These homes don't cost on average nearly as much as the homes that are sold. When you and I talk about the housing report, pretty much the average sale price, they say, like overall in Columbus, Ohio, is like $265,000. Some are more, some are less, but they're saying that's the average sale price, and that could be because of this reason or that reason. But my point in bringing up all of the options is to let you know, like, I'll help you find the home that you want, whether it's a home that's out there, whether it's a new build, whether it's a condo, a multifamily, whatever you want after we see everything, I'll help you with. The next step that I would, well, let me say one more thing. Sorry, I know I keep going back and forth, but I do want to say another thing. So there's different loan types. There's an FHA loan. That's a loan backed by the government. These loans have different terms, whether it's like 30-year, 15-year, et cetera, et cetera. You don't need to have perfect credit for these loan types. But it is backed by the government. And I hate to say it, these loans are actually looked down upon in today's market because the standards or expectations that they require for you to have this type of loan type, most buyers and their agents look down upon because it's more difficult. Meaning, like when you go through and you buy a house, right? These are the steps for buying a house, and this is what you'll go through. You'll meet with the lender because you've already met with me, your agent. You'll get pre-approved for an amount once they verify all of your inflows and outflows of money, and they'll give you a dollar amount, and they'll say, Pat, you can afford X, dollars towards a house, whatever the amount is. So then you and I will look at homes. You'll find one that you like, and you'll make an offer on the house. We'll submit a contract. If it's accepted, there's going to be inspections. There'll be an appraisal. There's going to be a period where you may request them to fix certain things. The reason why I'm bringing this up is because for the FHA, when they inspect the home, there are some things that they require that some sellers and their agents may see as very nitpicky or very, I guess you could just say annoying, like that, like you have to have this many rails on a certain property, or just things that if they saw another offer, it's more appealing than an FHA. Their standards are, I don't want to say they're too high, but for this market, like if someone sees an FHA loan and this other loan I'm going to talk to you about, they're going to go with the other loan because they know that the standards are not as high and there's a more smooth closing process with this other loan type, which is a conventional loan. Again, there's similar terms to an FHA loan, but with conventional loans, they have 15, 30, 10-year loans. They're most common in this market, and they're provided by a bank or a private lender. If you put down less than 20%, there's another private mortgage insurance that you have to pay for, but usually it's a small amount that's intertwined with your mortgage payment. But this is the loan that I'm going to try to help you get back, the conventional loan, because again, in this market, if we're going to be making offers, we want to look the most appealing as possible. When we do talk, I'm going to give you my recommended list of lenders, but you can talk with them, or if you want to talk with other people, you can, but whoever you talk to, I want to work on getting you a conventional loan. And actually I can keep going. There's a lot more I wanted to say, but I'll save it for another time and I'll organize it better. Sorry if this video jumped all over the place. I tried to keep it structured, but this is kind of me just talking from what I know. So check out this video. Let me know what you think. If you have any questions, I'm here. And of course, whenever the time comes, we'll meet and I'll have my second shot and you'll be safe and your grandkids will be safe, at least for me. And hopefully society as a whole, like we can progress to get better from where we were to where we are to where we'll be, and hopefully go back to normal. Feel free to reach out to me, Pat, if you have any questions about this or anything else. Have a good one.